Well,
All right. Hey, everyone. Welcome back to the Financial Summit YouTube channel. And we are back with Mark Wood to talk about all things markets at the moment, getting ready for the FOMC. Mark, how are you today?
doing great. Just hanging out. What do you think right off the bat? Rate cut, stay the same?
Rate cut. It has to be a rate cut. There is a 99.9% chance, according to the stock market, to the markets, that there is going to be a rate cut. Therefore, I'm expecting a rate cut. If he doesn't cut the rate, the market is gonna crash, like crash. And maybe I should exit my AMD trade before 2 p.m. today. We'll see. I did enter the trade. I discovered it this morning. Thank you to whoever asked me to look at it this morning. We can go ahead and glance at it. I got in a little after 10 a.m. And we can take a look at that. And then, Mark, I'm going to let you talk about Bitcoin real quick, because at 2 p.m. we're going to get the rate decision. By the way, I don't think we're streaming again. I don't know what is the problem.
We're not. I just checked the link. We are live, but it's coming up under it's coming up under the recent stream you did with Fibonacci and Matt.
I don't know what to tell you. I don't know what to tell you. Like, this may be our last stream because I'm so frustrated. I don't want to do this anymore.
There's some kind of a glitch with this. I don't know what.
Mark, this may be our last stream because I'm tired of it. I'm tired of setting this shit up and it's not working. Like, the one with Matt McGregor works. I'll keep doing that. But if that stops working, I'm done. I'm so fucking tired of shit not working, and I have no desire to learn new systems. I'd rather just go back to trading, which I actually started actively doing this month, now that there's options trading on the Bitcoin ETFs.
Yeah. Well, maybe, I don't know. I'll look in the chat. Maybe someone has a suggestion. There's something embedded with the way that this particular stream is set up. Maybe is there a way to have?
I have no idea. I don't know. I have no idea.
Okay, hold on a second. I'm just okay, so one thing we will take a quick look at, maybe right before the FOMC meeting, is inflation and unemployment. It's probably not going to have a big it shouldn't be a big
factor. Just go to screen share, look at anything you like. I gotta change the entire description. I gotta change the thumbnail. I gotta retweet everything. So just go for it.
Okay. Let me get into screen share really quickly. We will just take a quick look at Bitcoin. Let me just get my.
I wanted to talk about my AMD trade, but I'm not going to get a chance. Just go, and then 2 o'clock there's going to be a FOMC.
We can get to that. No problem. Hold on a second. Let me just find a couple things, and then I will get my screen shared. Okay. There we go. All right. So just really quick, we don't need to spend very much time on this at all. This is just something I would consider coming into the FOMC meeting. About rate cuts, I kind of agree with you, Tone. I think the rates will get cut. It's also just kind of a cyclic thing. It's very common. I don't know if it's a 4-year cycle, election cycle, I don't know, but basically Q1 of the year following the election into the inauguration, there is some quantitative easing. It's just a cycle that goes on. That is usually very bullish for the markets. It's usually very bullish for Bitcoin, and it's usually pretty bullish for the altcoin cycle as well. But here we are. I'm just looking at the unemployment rate. It's still lingering around 4. So that's a dicey zone. I know that it is unfortunately preferred to have unemployment rising above 4%, to have more confidence in cutting the rates. And the other thing to be watching for is a rise in inflation, which it's still it's fine. Like I don't see anything in these charts here that would suggest it'd be risky to cut rates. There's a little bit of a rise here, but the inflation rate is sitting around 2.7. Unemployment is around 4. It would probably be a very small cut, quarter point. Is that what you're thinking, Tone?
Yeah, quarter point.
Quarter point, right. And then we just see how the markets react to that. There's always some kind of volatility, regardless of it's a quote positive or negative announcements. I do think that just seeing Bitcoin, just watching Bitcoin the last couple of days, some people took some money off the table just to avoid that volatility and will reposition accordingly. So now that we got that out of the way, let's just take a quick look at Bitcoin. I'll just start with my MSR chart for now. And I am on the weekly. We are on a 4 MRI 4 count. And there's an interesting area right here. I will zoom in. There is an MRI acceleration right here in the 110K range. This is an area that I've been looking at for quite a while. I still think this is in play before seeing any kind of significant correction. But as we can see, this is one of the things about MSR. This gray dotted area right here is inside of the sky. It's called the moon, and it is rejecting the price. So it is resistance, but also the price is being squeezed by this very, very short-term 3 EMA. So one is going to give. Either the price is going to dip below 1025, or it's going to push above, again, 105K. And if it does, I'm going to continue to be looking for 110K. I just based on some other patterns and cyclic things we've talked about, I've been looking for a move somewhere between 112K to 120K, and then perhaps seeing a pretty major correction sometime in January, that back down to the 102K range. This has kind of been like my end of year outlook. And you and I debated whether we would see Bitcoin above 100K at the end of the year. I think this is close enough to say, yeah, we made it to 100K by the end of the year. Let me ask you a quick question. December 31st, is the price above or below 100K?
Good question. I'm going to say above 100, but under 105.
Above 100. Okay. Yep. I think I could agree with that. So this is the weekly chart. One thing to be watching for, 4 counts. This is something I don't talk about too often, but we have noticed in other groups that 4 counts, if you can see it here, it's kind of hard to see on this dark screen, but on the MRI, we've got the 1, the 2, the 3, and the 4 is right here, kind of covered up. 4 candles can sometimes be reversal candles. It's a strange phenomenon that happens. It's not super common, but it happens enough to pay attention to. So I will definitely be watching to see what this particular candle looks like at the end of the week in 4 days, and we'll get a clue when the CME closes on Friday. Right now, it's looking a little bit toppy. I will go to, let me do this really quick, Tone. Let me turn off MSR, and I don't need the moving averages or the MRI. So you and I had a debate on the MRI top, whether or not the idea of closing above the top band was going to be relevant or not. This is not part of your strategies or TA, but it is mine for sure. And even with this potentially bearish candle closing red, almost a hanging man candle that could have reversed the market, we did see a higher high, because if you zoom in, we can see very clearly that this candle closed above the top band. So now, again, we got the second candle in early December closing above the top band, and we got the signal for a higher high. This might be the first week closing inside of the bands since it broke out in November in the 70Ks. It doesn't mean it's a top, but it will give me some caution to watch for a potential top. Otherwise, let me do this really quick. I will show something that's still super bullish. If I put the moving averages back on, I only need to really be looking at one right now. And if you look here, I've got it set to 3. These are all EMAs. So as long as the weeks are continuing to close above the 3 EMA, I'm just a dumb bull. I'm looking for higher highs. So that EMA is currently sitting at 102.5K. So a weekly close below 102.5 will be a little bit of a change of behavior going all the way back to around October, November, where this moving average has been picked up and has held a support. So what this means, when you have the 3 EMA or the 5 EMA holding as support for closes on any time frame, I'm looking at the weekly, it is massively bullish. That is strong demand. Even though we've seen all these wicks and these drops, you can see every single candle has closed back above the 3 EMA. So now let me add to this. When I see it closing above the 3 and above the top Bollinger Band, again, I just stay down bull, and no need to be concerned about any kind of major correction or anything like that. So this is the weekly. Let's take a look really quick at what's going on daily. We can see yesterday's candle gave us a slight bit of a topping signal. I wouldn't necessarily call it a shooting star, but it's close to a shooting star, at least enough. So now I'm going to add the moving averages that I like to track, which would be the 21, the 55, and let me get the 8 EMA on there right here. That's close enough. And I'll move the bands, and I will give you an idea of what I'm looking at right now. Still bullish. We're seeing the price bouncing off of the 8 EMA. That is still generally bullish. Anything over or above the 21 EMA, the yellow 21, which is basically sitting at 100K, is still strong. And we can see these strong wicks and these few drops we've had have been held by the 21 EMA. So that kind of tells me that 99K is the dip until it's not. If we start to see days closing below 99K, then I would begin to anticipate a little bit larger correction. But from the daily standpoint, where's the MRI count right now? We're on a 6. We do have extension A, B, and C printed within these runs, but it's not hyper overextended in any way. As long as the next candle is above 105K, we're still going to continue green in the MRI count. We'll see a 7, which could lead to a 9. Would you be defensive on an MRI top in a few days, Tone? You're muted.
Yeah, I had to unmute. Sorry, you got a lot going on. I had to
That's
redo
okay.
everything, retweet, redo all that stuff, and there's a cleaning lady all around me, so it's a little hectic where I am at the moment. Look, I will be defensive. I will be equally as defensive on the next daily MRI as I was on the
Right.
last weekly MRI, right? So if you go to the weekly chart, you will see that I became very defensive on the last MRI because look at the run up into the MRI. Well,
Basically,
just the last three candles, right?
these three.
Right. If we get a similar ending, because remember, right now we're on what? A 4 candle, right?
Yeah.
So the current 4 candle is more like the 5 candle that we had before. It's the color is off on the current candle because TradingView screws up. And so the current 4 candle to me is equivalent to the 5 candle. I'm sorry, the current 4 candle on the weekly, right?
Yep.
Is I'm conflicting daily and weekly charts here. Sorry. So if you look at the structure of the current weekly situation, so fucking hell. If you look at the structure of the last MRI run up of the last weekly top, you see how we have a major run up in the last 3 candles,
Yes.
but the 2 candles prior to that were consolidating.
Yes.
Now go to the daily chart.
Okay.
Right? So now we have the last 3 candles are consolidating.
Yes.
So if we continue to consolidate and make an MRI top within consolidation, I have no reason for defensive action. But if we have a run up similar to how that weekly MRI looked, then yeah, I am taking massive defensive action above 110 on Friday afternoon before the MRI top over the weekend.
Makes perfect sense. Makes perfect sense, Tone. And I do agree. Anytime you're having sideways consolidation, so basically what Tone is trying to describe or say is we've had a nice little run up here, but now we're getting some sideways price action and what's running into these moving averages that are trending up. So if the next 1 or 2 days remain sideways, even though it brings us into an MRI top count, that I actually perceive that to be bullish myself as well. I do not get bearish. I see that as a potentially to launch into another attempt to trend higher. So we'll see. I do think that after the meeting, which should be in a few minutes, we might get some volatility out of the current price. It's just kind of sitting at 104.5K right now. So in the meantime, let's just take a look at a couple of interesting things while we're waiting. A long time ago on one of our streams.
Oh, okay, we're only going to be waiting 4 more minutes,
okay,
and then the action's going to start. So I will let you talk. I need to open my trading account.
Okay.
On another monitor because I have a bullish trade in AMD, and I still have my Bitcoin trade on. So I'm going to be watching this carefully in case I need to alter things.
Let's take a look really quick at AMD. Advanced Micro Devices. And I'm going to bet, let's take a look. I actually didn't see your stream today, but I'm going to take a guess that you are trying to come in on an MRI buy. Yep. All right, so here's AMD right here. MRI buy on the daily. And so Tone, did you enter the bullish trade?
Yeah. I got in at it was under 125.
Okay. So right around the beginning of this current candle. Now
Pretty much, yeah. I got in right after 10 a.m. I waited for the 10 a.m. reversal. Yeah. I got
Okay.
it. Maybe it was just above 125, like 125. It was just around 125. It's an option trade. I put in a limit order in between the spread. So I don't, it fluctuates. It was right around 125 was my entry.
Would you alter your trade on if this continues on and becomes a green star candle? Or
My trade is hedged. I already if it goes above 130, it's no longer as profitable. So but those options expire in 2 days, so I think I'm fine. We'll see.
okay.
No, I can keep this trade going, like I can make it go longer, but if it goes above 130 before Friday evening, I will have to alter the trade. Otherwise, I have plenty of time.
So you could potentially just let that options trade stay open and then open up a just a long on a green star candle.
I got plenty of options, right? Because you're only looking at the daily. Go to
Yeah,
the weekly,
yeah, there it is.
right? And look at the MRI top before that. And now we're buying on a reversal candle. Today's already Wednesday. And now go to the monthly. So in 2 weeks, we get a monthly MRI top as well.
Monthly MR, yeah. So Tone found the monthly, daily, weekly combination, which comes up only a couple times a year on an asset. And when you find it, you gotta take a stab at that, right?
Oh yeah.
Really quick, Tone. I was hanging out with some friends last night. Um, I'm curious to get your opinion on this stock. I've got an opinion on it. Um, one of the guys I was hanging out with had recently bought a Lucide and was asking me about the stock. Um, I was looking, I believe, at the two week or 3 week. I was not taking into consider MRI, but what I was watching, what I was looking at is this. There is nice, there is nice bullish divergence on the 2 week and the weekly chart right here between the RSI and the price, and we've got a green one count. So the next candle, I actually would probably front run this. I think I would take a stab at this, um, buying a potential nice bottom right here. But you could wait on the 2 week chart. Where is it on the weekly chart?
Oh, market is moving.
Yeah, market is moving. Green. In fact, this stock itself is moving as we're
No,
as
I
we're
know,
talking.
but they just announced the must have been an announcement. Let me see.
Unchanged.
I'm going to
I
the
see.
1 minute chart.
Uh,
Oh, we're going down.
let me see. Are you watching S&P?
Yeah, did they? Oh, I'm watching Bitcoin, but
Okay.
I can
Let's
go
see.
to the S&P. I can see it in real time. Let me see. Oh, because I'm on my broker's account. Oh, we crashed big. Shit. All right. How's my AMD doing? I'm still okay. Not as good, but I'm still up.
So let's.
Uh-oh. Did they not cut? What was the announcement?
I see in the chat it was unchanged, but
Oh boy, really?
I don't know that for sure.
No.
I don't know that for sure. Red Panda Pie says cut
No.
25 indeed. Feral also says no. What is it? I don't. I can't. I don't know.
So is it a cut or is it unchanged?
Feral analysis says it's a cut 25 basis points.
I'm on their website, but they're not like, where the hell did the announcement go? Where's their announcement? Press releases. Let's go. Here it is. Where's the announcement?
A lot
This
of
is the FOMC statement. Here we go. Got it. I found it.
okay.
So what the hell did they do?
Cut.
Committee decided to lower the target range for the target funds rate. Yeah, they cut. They cut.
They cut.
They did cut.
So
All right,
now,
so they cut. Okay, so we're gonna bounce back then.
yeah. So let
Yeah,
me,
we're already bouncing back. Yeah, they cut.
without taking away the meeting, if I'm just going to look at my most simplistic outlook on what I see on the S&P daily, right here when the 21, so the 21 could not cross back above the top band. Had it done so, it would have been more bullish, but it's still sitting below. So my easy analysis is always the yellow 21 is in play as long as price is trending below the orange 8 EMA. So I wouldn't be surprised to see 660.22 if the middle Bollinger Band is lost, but there's nothing bearish. It's just kind of consolidating at the top. Let me just take a look at some higher time frames. 2-day is closing in 2 hours. We got a 2-day close today. Again, just sitting above the ADMA. It's generally bullish. 3-day closes in 2 days. Let me see if I can find another. Okay, 4-day closes today. This is pretty. Without the bands or MRI, we can see that the yellow 21, with the exception of this little bear trap right here, has been a nice buy zone for the S&P. So if in fact this comes into a little bit more of a top into the end of the year, I would be looking somewhere between 5,800 to 5,900-ish for a potential buy the dip. But if things are to remain bullish, I wouldn't anticipate this to drop much more than 6K. I'm just seeing this broadening wedge, descending broadening wedge that I had drawn out. That played out absolutely beautifully. That is exactly what you would expect from a breakout of a broadening wedge, descending broadening wedge. And as we can see, the price broke out. First major dip was very bullish as just short-term AEMA is holding, and then it took a couple more legs up. Let's take a look really quick at the S&P monthly. So here's something interesting, Tone. Monthly is on the green 4 count. There's still 13 days left, so we can't, it's too early to determine. If I put the bands on, and this is going to tell me that I want the 3 EMA on. I don't know if I have it on this chart. Because it's the monthly is sitting, oh, here it is. There you go. So the monthly is sitting above bullish support right here. So this will be something to watch to see if we do get some kind of a top on the green 4 count into 2025. I don't see anything that's super bearish in here at all. Now, really quick, this is, I think, a much more important chart right here. And I really don't need these moving averages. And this is why. The 2-month charts. So we're about to see the close of the monthly, 2-month, quarterly, 4-month, 6-month, and yearly. All high time frames. And I do believe that big money hedge funds and institutions they look at these closes and they get ideas of where they want to consider parking money for at least the first quarter of the next year based on these closes. And what I'm currently seeing is incredibly bullish, although we can see right here that the MRI acceleration / resistance is offering a little bit of resistance here. If by chance the S&P closes December above 60.36, then we're going to get a close above the top band and above the MRI acceleration, and we're moving to a green 4 count. I'm bullish on that big time. Would you agree on that, Tone?
Yeah, I completely agree. The S&P is very, very bullish, which is why I was comfortable going long AMD, which is still dropping, and I'm not happy about that.
And then here is the quarterly, again, mega bullish. As you can see, the price just riding above the top band. And when that 3 EMA appears, it I don't have it on here. I know that's exactly what's going to be riding the price up. Um, so as far as coming into the end, yeah, there it is, the 3 EMA. I can zoom in, you can see it super clear. As far as the end of the year goes, the S&P is still looking really bullish. Bitcoin is insanely bullish. I'm going to get to that in a second. But really quick, now that we got this over, let me go back to this gold chart, because what we are seeing is what I anticipated. So on a stream with Tone a few months ago, this is just a pattern that I have noticed in markets in general. Well, no, I'm sorry. This is a relationship that I've noticed between Bitcoin and gold. They generally do trade together with the markets. However, there is often a counter trade to gold and with Bitcoin, but it does not come until you get some kind of a monthly topping signal. So if we can look back here in February 19, there was a twin top. Here is a nice shooting star top. Here's a little bit of a rounded top. And right here in the month of October, we got a confirmation of a local top on monthly with the low of this wick getting taken out. So now, what this is my theory. I'm holding to it until someone can prove me wrong. I believe strongly that there is a group of institutional investors. I would put them in the likes of Tyler Jenks that understand Bitcoin and understand gold and take this relationship and use it to their advantage. And they roll the profits out of gold into Bitcoin when the chart says to do it. Now, how much money is this? I don't think it's a lot of money. A couple of $100 billion, maybe. But if you put a multiplying factor of a couple $100 billion coming into the Bitcoin market cap, that helps rise the price quite significantly, as we saw with the ETFs early on. So right now, gold is making a fresh all-time low versus Bitcoin. And Peter Schiff on Twitter is losing his shit. So his tweets are highly entertaining in value. And if I turn on the MRI, it's on a red star candle with the MRI accelerator. So this will be let me zoom in really quick. This area here will be of interest because I do believe gold is going to trend down here versus Bitcoin. If this is lost, this is 0.02. If that's lost, Bitcoin is going to fly. It's going to absolutely fly. Now, here's why I like looking at these charts, Tone. You prefer to look at the opposite view, but what this tells us how to actually view Bitcoin as an asset. We got to realize we're looking at Bitcoin versus the highest market cap asset in the world, outside of perhaps real estate, right? But you know that it's hard to well, we can put Bitcoin versus real estate by looking at our REIT, but gold currently is sitting about a $17 trillion market cap. Bitcoin is right around 2, and we're seeing it make fresh lows. Back in the early days, I'm not even going to cherry pick the extremes, just back in the 2015 bear market, as Bitcoin was starting to run to 20K during 2016 and 2017, it took 5.6 Bitcoin to buy 1 ounce of gold. That's what this chart is showing us right here. Okay. As Bitcoin made its run from a couple $100 to $20,000, that dropped 99%. And at the 20K highs, which this bottomed right in January 2018, which helps solidify my argument that there is a counter trade between these two. This topped at requiring only 0.07 Bitcoin to buy 1 ounce of gold. Currently, it takes 0.025 Bitcoin to buy an ounce of gold, as gold has run to new all-time highs. So this is the reason that I absolutely love looking at charts in
Yeah.
this manner.
Hey, Mark,
Yes.
is that blue line? Is that my acceleration line?
Yes.
Oh wow, that's been money.
That's what?
That's been pure money.
Yeah, absolutely. Absolutely. And if so here's my
That's a breakout waiting to happen. And look, this thing even follows the MRI relatively well.
it follows it fantastic. So the monthly, I am on the monthly chart. We are looking at a red star candle on a new fresh low close coming into the end of the month. So I am going to continue to look at this to trend lower. The RSI, let me see where the RSI is. RSI, you can't even really look at the RSI on this. Although there is an interesting signal that is coming from the RSI. If this month you can see this, we can go back and look in history what happened in January 2024, but we know what happened in January.
And Mark, that can't be the RSI.
It is. But this thing is, you got to realize this thing is fried. Like gold is going to zero in theory. Because Tone, this has been
Boy, that makes no sense. How can that be the RSI? Are you sure it's the RSI?
Yep, it's set to 14.
Oh shit.
141270.
Okay.
But the point I'm trying to get to is this: if this month closes with the RSI crossed below this moving average of the RSI, it's going to be incredibly bullish. So we got that cross in.
So this RSI is perpetually below 30?
Yes. Yeah, because I mean, I think it's just because you got to realize that.
Right, because you have a ratio that's going sub-zero. Okay, got it. Okay.
Yeah. I mean, look, all that this has done is gone down. I mean, this has been a perpetual downtrend, right?
Right.
So yeah, in order to get a better idea of RSI, I would have to look at this Bitcoin versus gold, which we can take a look at. But let me go back to this real quick, and I'll get off of this topic. What I do believe is if we get this fresh low close, we are going to see this trend lower. And if this ratio drops below the MRI acceleration, I think that will take place if and when Bitcoin begins to trend pretty strong above 110K. And it doesn't matter what gold is going to be doing in USD. Bitcoin is going to outpace it at that point. So we'll see. It is a possibility that some kind of a major low settles right here in the 0.023 range, but it's not what I'm expecting. Gold versus USD is still very, very bullish. It hasn't even dropped down to the 8 EMA. Here's something interesting really quick. So I took a Fibonacci just from this breakout consolidation right here. This isn't the macro Fibonacci. This is from the August 2020 high. This was this 4-year consolidation tagging these highs down to this kind of like wedge low. And we can see here that this current move in gold topped right at the 2.618. Now, this breakout has been telling me where I believe Bitcoin is going, because I can't remember if I have this Fibonacci on here. I do. So I believe I have had a theory that gold is leading Bitcoin, and sure as hell, this move has topped right at the 2.618. It just took Bitcoin much shorter time to get there once it broke out of this of this mess right here.
Hey,
So
Mark. So my 2.618 was at 102,000. Yours is at 106. So we have a little discrepancy there.
okay. Well, I didn't bring it all the way to the bottom.
Okay.
So I was looking at this like if I put this on weekly, um, I was using this kind of more along the line how Fibonacci does it, and this is very subjective. Tone.
Mm-hmm.
Look, let me explain to you why I did it this way, and why I think this is a little bit more accurate rating, especially.
Oh, it's also not 2.61, it's 1.618. So we are looking at very different things.
No, hold on. I did take a measurement from the wick high. This is the March high at 74K.
Oh, you're not using the bear market, you're using the recent pullback.
Yes. And that's what I was showing
Okay.
on gold. Now, that's why I called the other one the
Okay.
macro. I called the other one
Okay.
the macro. Yes, yes. But I connected the bottom to where these wicks were. Like this is where Fibonacci kind of calls his, his emotional whatever threshold theory, which I love. I buy into it big time. Very clearly, there is a lot of interest in gold here, or in Bitcoin at this 54,800 range. Yes, we had this one wick, so I could extend this down there. It's still topped at right around the 2.72. So these Fibonacci extensions, there are several ways to look at them. But yeah, Tone, here is the macro fib. And I'm going to show something really interesting that I discovered recently. I got to make sure.
Hey, we got 10 minutes and then we're going to listen to the press conference. So just a heads up.
Okay. So if we look, this is the macro. Let me zoom in here. This is the macro fib taken from the 69K top down to the wick lows, 15.5K. And as we can see, this 1.618, I've had a high level of confidence since this bear market closed. This is why I was so aggressive accumulating Bitcoin between 15 and 20K, because I've done a lot of analysis on these Fibonacci extensions. I felt with almost 100% confidence that once this bear market was over, that at minimum, Bitcoin was going to 102K at minimum. And if I extend a horizontal ray from the 1.618, we can see that is right now where the price is struggling to move. Now, typically what has happened in the past, and I actually have a cleaner chart to take a look at this, is a move up somewhere below the 2. So somewhere between 100 and 120K. And then there would be a test back of the 618. Now, maybe perhaps this is all we got was this move up to 108. But that is TBD. It's still too early in this current week to talk about that. But anyway, I found I'm incredibly bullish on Bitcoin versus gold. Really quick, let me show you this. I have a much cleaner representation of this idea now. I have brought up in recent streams this incredible growth curve that I've been observing, and I've only seen a few people discuss this on Twitter. The only assets in the stock market I have found to have a similar growth curve to Bitcoin is Berkshire and Microsoft, MSFT. So let me take a really quick look. Let's just observe what happened here. This, we all know that this COVID dip took Bitcoin out of all kinds of prior moves. Like in the couple prior cycles, the price never dropped below the prior all-time high before. This cycle, it didn't even make it to the all-time high, and it dipped below almost to make a double bottom. However, this side, basically, if you think about it, Bitcoin went sideways from July 2018 until June 2020 for 2 years with a pop down and a pop up in between, but basically sideways for 2 years. That allowed this secondary curve to begin. And if I go to the Microsoft chart, we can see the same type of move as the price has just climbed up. It's currently outside of this. I don't yet feel, I could very easily fudge this curve. This is very subjective, but I like having all these connections down here. The point is, this structure is incredibly similar to what we're seeing to Bitcoin. And I do believe that it's possible that Bitcoin has gone into a phase where the price is going to continue to climb up this curve, taking it closer into the $800 to $1 million price range, perhaps after the next halving. I certainly would think by the 2032 halving. And here is the BRK.A. Exact same curve structure, and it is actually still holding. So, Tone, do you have any thoughts or opinions on this reversed curve growth for Bitcoin?
It looks great. Let's see if Berkshire Hathaway can make it that high up. All they gotta do is like double or triple, which doesn't seem like a big deal. For Bitcoin, that's like $5 million a coin in two and a half before the next halving.
Well, it's not quite that high. I'll go back to it in a minute. But here's something interesting. This is so skewed that you don't quite realize that from this touch of this curve, which took place in 2020, it was at 246,000. It's now sitting at 682,000. That was a massive rise. And there is a bit. This is a high time frame chart. Let me see what this looks like. No, it's not. I was thinking I was seeing an ascending triangle. So let me go back to that Bitcoin index chart.
Yeah, pull up Microsoft as well.
So yeah, so Tone, if in fact, let's just speculate really quickly. The next halving is going to be probably March 2026. If this particular curve stays intact, that is suggesting Bitcoin at ridiculously high prices. Literally $750,000. Now, there is another way for me to interpret this.
Yeah, you know what? At the height of the last bull market, when Bitcoin was like 65,000 4 years ago, I can't believe it was like 4 years ago in 2021. I was gonna try to somehow do a poll with some kind of I don't know. It was gonna be so I was gonna ask two questions. I was curious, what would happen first? Bitcoin $1 million or Bitcoin finds 1 millionth block? And what would the price of Bitcoin be at the 1 millionth block?
Which the 1 millionth block is the next halving, right?
It's a little before that.
It is. All right, so hold on. I flattened this curve out a little bit. This gives us a little bit more realistic price target. So here is March 2026 at around $275,000. What we would need to see is this particular cycle kind of go parabolic, bear market, back down to the curve and climb up into the halving, which is what we normally see. So this is absolutely not unrealistic, in my opinion. This curve is a little bit more accurate. I drew it really quickly before, but I love these touches from the COVID lows to the bear market lows at 15K to this lows of the consolidation. This is super, super clean. I will go back to MSFT.
And check out Amazon as well after.
So here's MSFT, same same type growth pattern. I can maybe put a tag right here. The point in how and why I believe this is happening with Bitcoin is what we saw in the stocks after the 2000 top. That was basically a hyperwave top. And as you can see, it took years. It took 16 years to get back to the prior all-time high.
Hey, Mark, we have 2 more minutes. Can
Okay.
Can you just check real quick if Amazon fits this chart and then the Nasdaq 100?
Amazon does not. I've checked it, but because Amazon after that first major 95%.
Yeah, no, it doesn't.
It's more.
So check NDX.
It's more like this tone. It's just kind of like climbed up this type of a curve.
It doesn't have enough history.
NDX also not quite the same, right?
No, it's not.
I mean, trust me, I took a look at so many stocks to try to find the pattern. And so far, Microsoft and Berkshire are the only two models that I've found in the stock market to go by. And I'm just loving what I'm seeing in the current price action of Bitcoin because it's sticking right with that type of cyclic pattern. It's quite incredible to watch. It would require that this cycle goes fairly high. I would have to say like into the 250K range, even if it drops back down to, let me get back to the index chart really quick. So even if it drops back down into the 75, 80K range in the next bear market in 2026, although a lot of people are thinking this might continue on, I'm skeptical of that. This could still withstand a bear market of $100,000, which I don't think is unreasonable, especially if the price does trend into the 200,000s in 2025 and come back and touch this curve. That really sets things up to be parabolic into the 2026 halving, which I think by the next election year, I think Bitcoin could be at 500K. And people would say that's too low. I think it's crazy. It's a 5X from here. What do you think about that, Tone? So the next election is going to be 2028.
Hey, Mark, I gotta turn on Jerome Powell 1 second.
Go for it.
Can you hear him or no?
Not yet. Let me see.
Hold on. Can you hear him or no? Not yet. Where the fuck did this go? Hold on. You gotta stop screen share. There we go. Oh, how do I get the audio? Shit. What is happening here?
Yeah, I don't hear.
Hold on
the stream.
I know. Zoom is just too annoying right now.
GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter.
Yep.
Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low.
You can't see it.
Nominal wage growth has eased over the past year. In 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while establishing further progress, enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today, and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
All right, last question.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not, and I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many, many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have.
I think I've heard enough. I think that's enough from Jerome Powell. So the market is not happy. He did cut the rate. They did say they're looking to cut a little bit more next time, but the market is not very thrilled. And this goes back to what I've discussed on this channel many times. You only decrease the rate when you need to stimulate the market. You only need to stimulate the market when there is a problem with the market. So these rate cuts, they're not very bullish. They're basically, Jerome Powell is saying, we see massive recession on the horizon. Otherwise, why is he cutting rates? I don't understand.
I don't disagree. I do think that I do think a recession comes in 2025, but not until later in the year. I still think the market is going to be very bullish into 2025. We do have a 4-hour. No, I'm not sharing my screen. We do have 4-hour coming into an MRI at the end.
Yep. And we're gonna get a warning arrow in about 7 minutes. I am more concerned on my AMD trade, which at the moment is slightly lower than when I got in. I'm still profitable on the trade for now, even though it's lower than when I got in and it's a bullish trade. I'm not gonna get into the mechanics of how that's possible. Someone has to watch my options courses. But I'm not happy about this. But this is a longer term trade. So I'm still expecting it to reverse. You want to take over screen share, Mark?
Yeah, really quick. I will.
Go for it. Hold on.
So just really quick, we'll take a look at what's going on. I should be sharing, right?
Yes.
Okay. So it's nothing crazy. It's just a typical these FOMC meetings are just, unless it's something crazy going on, they're just there to stir up some volatility and get price moving where it was probably heading anyway. Prior, like if I'm looking at this this current daily candle yesterday gave us a warning that, hey, this 108 move might have been it for a little while. Once the low of this candle was taken out today earlier at 105.3, that just probably meant that it was going to trend down. It's still pushing on very bullish support. This is the 8 EMA. Perhaps this consolidates a little bit more and drops back down closer to around 100K in the next couple of days. But what I was just talking about with tone is we are on a 7 count on the MRI 4-hour, and coming into a couple of areas of support. One I have here with the 55 EMA, and there's another that this is the 89. So somewhere between 101 and 103 might be a dip buying opportunity, or perhaps a short-term trade. This doesn't affect anything that I'm doing long-term at all. It's just price moving where it was probably going anyways. That's my opinion on this. I do agree with Tone. Like what I was trying to bring up earlier in the stream is unemployment is stable at 4% and inflation is basically stable with a slight uptick. Like that doesn't suggest that rates should get cut. There's just keep it the same, right? But unless Powell is projecting something deeper into 2025, which is what Tone was suggesting, and I'm tending to agree with that a little bit. I do believe that the 10-year and the 3-year is now reverting, and that is a sign to pay a little bit closer attention as things come along. But again, we looked at the S&P high time frames, and I just have no concern about what's coming in early 2025 at all whatsoever. Really quick, and then we can maybe wrap this up. We've been going a little while. I just wanted to cover a couple of things. So this is the RSI of Bitcoin on the 2-week chart. I love this trend line. I actually think the 3-week chart, 2-week is probably a little bit cleaner. So on the 2-week chart, we do have a higher high tick. We also do on the monthly. Let me show you this on the RSI. This is really important. The monthly RSI has taken out this initial high of 77. So that eliminates any concern about bearish divergence on any kind of a high time frame. This suggests to me that the RSI is going to, on the monthly, is going to trend back into the 80 zone. And then the power happens above there. You can see the spikes, the tops come above there. Now, when I go back to the 2-week RSI chart, there's just a beautiful trend line that is keeping me believing that these high time frame RSIs are going to trend above 80 again. And once the 2 week starts to get around 86, that is going to be a time to pay attention, either for a market top, or the other option is that that is an initial top, and then we get a spike in the price and a lower high in the RSI to create bearish divergence, kind of like what we saw here in 2021. Right here was 3 drives of lower lows, which was creating all kinds of bearish divergence. So there is a little bit of divergence here that's bearish, with this being the $74,000 top and this being 100K, but it's nothing at all remotely confirmed. And I still think this is going to trend higher. Now, if we want to start talking about super cycles and getting mega bullish, then what I want to see is this high of this is March 2021. So I believe this was the 65K top in 2021. That would require the RSI as it's coming into 2025, let's just say summerish of 2025, to trend above 92, to actually break this declining high trend that we basically have seen from the very beginning. So a question to you, Tone, is, do you think these high time frame RSIs are going to put in yet another lower high to find the market tops, or do you think this cycle might break through there?
No, I think it's gonna put in a lower high.
You think it's gonna hold this trend line?
Yeah.
I don't disagree. I will say this. This is purely speculation. If let's go back to like the 2 week chart. If the 2 week chart begins to break, like, let's just say like into 90, I do think that we would see the price of Bitcoin above $200,000. If that was happening, would you agree or disagree on that?
Sorry, say again.
Okay, if I'm looking at the 2 week RSI, here's this trend line.
Right.
If this RSI breaks this trend line and starts to trend up around 90, let's just call it in the 90 zone, I do believe we would be seeing Bitcoin at a price higher than $200,000.
We can see Bitcoin higher than 200,000 and not break the trend line also.
Totally agree. I absolutely agree, Tone. Really quick, there was one thing I wanted to show before.
Dude, S&P is still crashing, man.
Yeah, but it's Tone, it's not, hold on, let me go back.
Yeah, I don't understand what Powell is doing. It makes no sense. I mean, he's gonna get fired anyway. Why is he lowering the interest rate? I don't get it.
I think that okay, so let me go on the daily chart really quick. Like I mentioned before, my TA was saying that the 21 EMA on the daily chart is in play. Let's see, finally generate here where this goes. Okay, so this was broken as we're going, and right here we've got price at the bottom band on a green star candle. I mean, I'm sorry, on a red star candle. So we shall see. I mean, in my opinion, the S&P was heading down this direction anyways, regardless of what's happening. Currently, this current 4-hour candle, very bearish, as it is closing below the bottom band with a squeeze, after a squeeze. So this is suggesting that it is going to continue lower around 5,900 into the end of the day or tomorrow. There might be a bounce tomorrow to test the bottom band and continue down. Now we can see here on this particular moving average, if I eliminate the bands, this has basically kind of been the base for the price. This dug a little bit deeper to its other moving average support, but we will see a change of behavior as I would like to call it, if 5,900 is actually flipped into resistance on the 4-hour chart into the end of the week, and then we would start to look for these lows to get hunted around 5,800. And Bitcoin, of course, is also seeing a drop. I still think this is going to produce a bounce out of Bitcoin. This was a bit of a head and shoulders right here, a little bit of a rounded top. And again, looking back on daily, recent history suggests 99.6 area could be a nice place to take a bite if you're trying to maybe find a scalp long or a swing trade, because it's kind of easy to set a stop loss. We can see here that this has been support with wicks just a few percentage points below there, a half percentage point. So you can just put a stop loss very close to here, and if you're wrong, no big deal. You're going to get a little bit deeper discount. What is concerning though is the look of the current weekly candle, and let's take a look at the CME, because that's going to close in 2 days. And right now, it's looking like a decent topping candle with this MRI resistance again right up here at 110K. So we shall see. But let's really quickly move away from the initial bearishness and talk about one of the things I'm seeing. So if I get rid of these bands, let's take a look at what happened last cycle as price was approaching the 1.618, which is where it is right now. The last cycle, it spiked up to the 2.72. Once it finally breached up there and then corrected back down. Now, this correction was about 25%, I think. No, it was 30%. So that was a perfect 30% bull market correction. To replicate this move would require Bitcoin trending up to 140K, which I don't think is going to happen. I'm not that bullish on it. I still think it could trend somewhere up to the 2 and then reverse back down and test the 1.618. This cycle could be a little bit different. We shall see. If I go back one more cycle, we can see the same thing where from the 1200 top down to the bear market lows, the 1.618 got breached all the way up to the 2.618 with another massive correction straight back down to the 1.618, final buying zone, and price took off. And it even happened in this cycle prior to that. The price spiked all the way up to the 6.618. This was when early days. However, if we look here, there was a massive drop from $260 down to $50, 80% drop, but it tagged the 1.618 perfectly, and that launched price into that secondary range. So what I'm trying to convey here is once this area of $102,000 is fully confirmed as support, let's say we're getting like 2 or 3 weeks consecutive closing above it, that's when we can begin to take a look at these larger extensions. And I have been looking at the 2.618 as my conservative top. I've mentioned that on several streams prior. Now, if I eliminate the drawings and put on the multiple bands, we can see, this is the weekly chart, we can see the price is trying to get pulled up to this 120K. That is right where that 2.0 Fibonacci extension is. And back in the prior cycle, we can see the green band was resistance at that 14K top, which propelled Bitcoin into the bear market. I don't think that's what's going to happen. I think we're going to see something more similar to what happened here in 2020, where there were some drops and some consolidations below that area. And then once picked up, price shot up to the red band. The red band is where I am considering looking for this market to top right here. These are just multiples off of the black 200. That's all that they are. Each one's our best fit multiples that I actually drew on the 3-day chart. We'll take a look at the 4-day really quick. 4-day perhaps has finally picked up this purple, which is sitting at 88K. And as we can see in the prior cycle, the purple band took some time to get established as support. And once it was really trusted as support, the price flew up to the green, got stuck there, and then flew up to the red. So this was attempt number 1 in the summer to pick up the purple multiple, and it failed to hold, and price came back and tested this as support, and it held beautifully. Now I would anticipate this next layer is going to hold a support as it's rising in price, and the price is going to get pushed up to the green band into the 123, 125K range over time, like perhaps in early Q1 of 2025. And why am I still this bullish? Well, if I get rid of the bands and just look at the current 2-month chart, we see here, this is my final bull market signal that I've been talking about. On the very first stream we did together, I was concerned about this candle right here that closed in March of 2024 as a red candle looking like a top. And sure enough, that led to 4 candles of consolidation. So we are finally getting, with a high probability, unless Bitcoin crashes below 86K in the next 2 weeks, which I don't think is going to happen, the very first close above the top band. So historically, let's look at what happened there. In the 2020 cycle, that took place at $29,000. Price more than doubled up to 65K. In 2020, in 2016, in November of 2016, that signal came at a price of basically $1,000 and did a 20x from there to 20K. Even going as far back as 2013, when the bands were just forming, we got a spike above this first high at $31, and it took the price up to $1,200, right? So in my opinion, with the bottom band looking like it is right now as well, this is exactly what you want to see. You want to see the bottom band rolled over and diving strong to the downside, just like we saw in this market and we saw in this market as the price is closing above the top band. This tells me, which we brought up on prior streams, that to consider the price doubling from wherever this month closes is not unreasonable in the least. So any close above or around $100,000 is going to continue to look for me to see the price double. And there is one other thing, if I go to this BBWP. So this was one thing that we were looking at. I have the eyeball and the finger pointed here as this was rolling over and finally bottoming. This was one of the least volatile times in Bitcoin history. This has to do with the distance that the Bollinger Bands were from each other. This was the tightest squeeze, absolute tightest squeeze in history. And this is exactly what I would expect to be seeing off of this signal once we knew that the direction was going to be to the upside. So now what is happening is this BBWP indicator is starting to trend into the 50% area. As we can see, off of this low volatility move here in the bear market lows, it reversed right below 50. So we do have to look for a bit of a top coming into this area. But what I will be looking for at this point is for something more like what happened here in October of 2023, which basically took the price from $25,000 up to $75,000, a 3x. But as you notice, you can see the gray moving average. Let me zoom in a little bit more on this. The gray moving average of this BBWP trended above 50. Okay, it's still sitting way down at 20. So this tells me there is either a massive amount of fuel left in this uptrend, or perhaps I have seen Eric Crown give some theories that this cycle might end early, like in February. I don't think that's what's going to happen based on the 2-month close, but if this rolls over and we see something like this, maybe. I just think this will be a dip and higher. As you can see, I have the eyeballs layered here into August of 2025 to look for this indicator to top and perhaps give us a topping signal to where this move is starting to get overheated. Until this indicator begins to flash orange, bright yellow or orange, at least yellow, it's still in the green, then I have no concern at all that this move, especially with the bands being as tight as they were, is done expanding to the upside. I still think the price is going significantly higher. And that's about all that I have to talk about today, Tone, unless there's something you want to take a look at before we sign off.
No, I don't have anything else to take a look at other than the markets are really crashing. And this is the stupidity of what the Federal Reserve's doing. All they had to do was say that the economy is pretty strong and we have no reason to lower the interest rate. But they should have given the market that in anticipation months ago. And they could have not lowered the rate and the market could have gone up, right? But instead, they led the market down, they lowered the rate, and then they still led the market down. So I think this is going to rebound. I don't think this is a problem, but because they're lowering the rate, they're getting me concerned that the markets are going to actually crash. And normally when the markets crash, the Fed lowers the rate to stimulate the economy. But if the markets are crashing with the lowering of the rate, then they'll have no ability to stimulate the market when it actually keeps crashes for real. So there's a lot of stupidity here. I don't understand why the Fed's lowering the rate. They shouldn't be lowering the rate. I think they're only doing it because they promised a long time ago that they would, and somehow they have to stick to that dumb promise. So let's see what happens. I'm still in the AMD trade, and I still think it's going to rebound tomorrow. I'm going to trust the MRI because today is the daily MRI. The trade was doing really well from 25 all the way to like 28, and now it's down to about 23.5. I still think it's going to rebound by end of the day, which is only 45 minutes. I think the markets will catch a bit at the end. The rate still got lowered, so the markets should be generally more happy than usual. But yeah, I don't really have much to add. The Dow Jones is still crashing badly. NASDAQ might have found the bottom. And Bitcoin is still dropping, but Bitcoin might have found the bottom as well. We fell down to 100. Okay. This goes back to my other point. I don't know how often you watch our videos every morning. I was 90% confident Bitcoin was going to close below 106. I should have been saying 105 because I thought 106 was equivalent to $60 on IBIT, but $60 of IBIT is actually equivalent to 105. So the market's going to close below 105 on Friday because that's what IBIT told me it will do, simply because of the max pain in the options market. So I'm still expecting the Bitcoin price to be 105 or under going into Friday. And the interesting thing on AMD, this Friday's max pain is actually 132. that gave me extra confidence to go long this morning when I did. I still think the market should have a bullish day. Now the Dow Jones is on 10 consecutive down days, which apparently hasn't happened since like 1960 something. So there's going to be a positive day sooner or later. Man, even in the 08 crisis, we had positive days. So it's, we'll see. We'll see how it goes. But for now, we're just going to have to wait till morning and see how, where the chips fall.
So really quick, just current price action. I'm on the 4-hour chart. MRI has given us a warning, as Tone mentioned. We could get an MRI buy bottom signal in a couple of candles. And it is sitting, the price is currently sitting at some very key support.
Right. That's the other thing I was going to say. The MRI support line is very interesting to me as well. Bitcoin should find a bottom near here.
I think it will, Tone. It might wick a little bit lower, maybe do a lower low and get some divergence. I would be kind of surprised to see it dip down to this next layer of support. If I go to a slightly different time frame, oh yeah, I like this on MSR as well. So if I zoom in here, even though this is a green star candle, and this is where I kind of trump MRI a little bit with some of my own analysis, like this says on low time frames, we're only talking about the 2-hour time frame. Well, you could have gone short when this signaled right around 102.7K, and if I were scalping, I already would have taken profit down here. But what I'm seeing here is one of the bullish crosses I talk about. This is the purple 200 EMA, and it's above the 200 SMA. And whenever you have the EMA above the SMA, it doesn't matter the time frame of the same denomination. That is going to make that price range more likely to hold a support, at least on the first pass. It is very possible that we get a bounce and then a lower low even below here. However, seeing this, basically what MSR is telling us on the 2-hour time frame is anywhere between the buoy, which is 98.8K, up to the top of the beach, which is 101, is getting into lower risk long territory, or to consider closing shorts if you went short. Anything below 97.3 on this time frame is so this is incredibly low risk buy area, even though it's only the 2-hour time frame. Very, very, very low risk at 97.2, because you can have a stop loss almost right where you bought. And if that gets taken out, it's going to go significantly lower. So one of the things I like to do is get the MSR out and go on low time frames, something like 15-minute, and try to scalp these lows. See if I can find some kind of a local bottom. The 13-minute chart, which nobody looks at, but it is a Fibonacci number time zone that I absolutely love, is giving us an MRI buy, and in 1 minute is going to print a green candle. So that is a potential very, very short-term time frame low being formed here. I would need to see the next couple candles closing above the close of this, or at least taking out this wick high, to consider a bounce back up into 104K. But the 4-hour chart is showing us Bitcoin is sitting at key support right now. So one thing I will have to watch is, let me take off the MRI, the green moving averages. Right now, this light green is bending down as the dark green is trending up. These are the 50s and the 50s. If that crosses bearish, here is an example of that. Kind of right in this area. It's jumbled up, but that crossed, I'm sorry. It would have to be, wow. I have to go back quite a ways.
Mark, I really have to go. So you
Okay.
gotta finish up in like 30 seconds.
This is it right here,
Sorry,
Tony.
I've been like texting and I like doing stuff, so I wasn't really crazy listening.
That's no problem. This right here on November 24th, we've got the 55 EMA crossing below the SMA, and that pulled the price sideways for a good long time, but it never dipped down there, and we got a big run. So this area is it's in essence, here's what I'm saying. I would like to see the price base somewhere around 101K and get back above 103K soon, to avoid a further drive down. But as it is right now, we are seeing price at support. It's a reaction off the FOMC. We always get some kind of volatility to the upside and downside. It seems like it's more often to the downside, no matter what the call is. So let's just see how the day recovers, and that's good enough. It's good enough for me, Tone. I'm good.
All right, so jump off screen share, and I'll just close this out. All right, guys. Thank you all for watching. Thank you all for watching, and we'll see everyone tomorrow morning with Matt McGregor. I think that the market is likely to rebound here. I'm still watching the markets. I still got 30 minutes in this trading day with my trades. Bitcoin was back down to 100K. It's kind of crazy how people still make fun of me for that call a month ago that Bitcoin was gonna struggle maintaining 100K, and it could easily fall below 100K and go back into the mid 90s any moment with this move here, because the markets are just not happy with what the Fed is doing, because I think the Fed is making a huge mistake. The Fed could have talked in a way to convince the market that a 4% interest rate is good for the market, and instead they're lowering the rate while talking about, not talking the economy up. So it's a weird situation, and I don't have much else to add on this, so we'll just do it tomorrow.
Tone, I see AMD settling between 114 and 118, and that's probably a very good buying opportunity.
I just don't see it going that low because of the MRI daily, weekly, and monthly already here. It's possible we can reach another daily MRI buy and still be in this, position of daily, weekly, monthly. And we just breached yesterday's low on AMD. But because that this is a reaction to the Fed, I am going to wait till tomorrow to make any decisions. I am going to hold this overnight. It's also a hedged options trade, so I'm not concerned unless it crashes down, and in which case I have other ways to manage it. So for now, I'm not that concerned over AMD. I still think there's a reversal incoming, but Bitcoin is a little trickier.
Really quick before we go, let me just show you what I'm looking at. This is super bullish, Tone. This is weekly chart. This is the 200 EMA crossed above the SMA. So right here, this should, in theory, be incredibly strong support, and that layers between 114 and the top of the beach at 118. That gets into like very, very low risk on weekly to hold as a long-term support. And but I do think it's possible. Like if this current low right here from August 2024 gets taken out at 121, I do think it's possible to get one more little drive down here. So we'll see. We'll see. This could also be.
The thing is, I don't want to be holding that trade into 114. That's way lower than my comfort zone on a stop loss.
I get it. This could potentially be a W bottom right here, right in this price range on that daily MRI buy. So this is showing us 120.45.
All right, Mark, I gotta go. I gotta go.
Okay.
Sorry, we gotta end the stream.
I got you. I got you. All right, Tone.
All right.
We'll
All
check
right,
in.
you do have to come off screen share for me to do that. Because the buttons like change when you're on screen share versus when you're off screen share.
I just ended it.
No, I
No?
still see your screen. No.
Hold on. You still see my screen?
Yeah.
Interesting. Hold on. Let me share it again.
All right.
And then-
Never mind. I found a way to do it. All right. Thank you all for watching, guys. It's okay. We will see you all tomorrow morning with Matt McGregor. Bye, guys.